Welcome back, everybody. It's time to look for new positions and track some more transactions, so let's get right to it. Hello, welcome back, everybody. We are sitting here on part 4 of the series that I'm running on Apple of basically running the continuous wheel strategy on it. So we started off selling a cash secured put, got assigned on that, and then turned around and sold a covered call on it, and also sold another cash secured put on it to play both sides, which in this case ended up being the same strike because of where the price was currently setting at as of this uh, previous Monday. Virtually it was setting right at 270.26, so it made sense to go ahead and just run it at the same strike. So here you are. You can see we are setting in the last 2.5 minutes of that Friday virtualization. We have the 270 call, the 270 put that we sold. You can see the call is currently in the money, which is ideal. We want it to be called away. Um, I mean, if you're a capital gains investor, you'd be like looking at this saying, "Oh my gosh, I'm losing out on $3 of the profit." And it's like, well, we're not doing this for capital gains, or at least I don't do it for capital gains. I do it for the cash flow of selling the option premium. So I look at it from the fact that I sold a cash secured put and a covered call, and I got the premium on both of them, and I'm getting out of the stock, so I can just turn around and do it all over again. So anyway, we need to speed this up. So I've sped it up a little bit, so we will get to the closing just to prove that it did close above 270. And then since we're an on demand, it's not going to do it automatically. So we're going to, basically just simulate that it closed out the positions. But furthermore, we're going to go back over to the web application and track all of those transactions. And that doesn't do a simulation at all. It's actually calculating everything out the way it should be. And yeah, we'll find out how it ends and the results for all of that. So we got like 10 more seconds virtually. It's sped up a little bit, so it should end really quickly here. And come on, there it goes. So we stopped at the 272. Let's do that. Okay. And that is really hysterical. I am blind. That's 1450, not 1500. Okay, I'm going to leave that in as a nice little joke. Anyway, all right, let's do this. This should be better. That's really funny that I got that so wrong. That's hilarious. All right, come on. Oh, is it still going? There we go. I'm almost certain this thing's going to end above 270. There we go. Finally. Okay, now we're cooking. Okay. So there, proof that it closed above 270. So we will get called out of the call and this expired worthless and our shares are no longer ours. So let's go over to the web application. All right. All right. Here we are on the web application, myatmm.com. We're setting on the cost basis page, have Apple currently pulled up. So what happened? Well, our cash secured put for one expired worthless. So we can actually just delete that guy from the positions in play. We just get to pocket that money. That's always nice. All right. The call expired in the money. So we got assigned on that. So we want to do assigned. The funny thing about it is you don't actually have to do assigned on this one because an assignment on a call is really just getting rid of the stock. So you could go through the motions of that. You don't really need to. So I'm just actually going to delete this position. But what we do want to do, and actually, let me go ahead and just do this. So if I click submit here, I don't think it'll remove the stock for us. But what it will do is it produces the sell to close uh, helper position. So we did want to do it for that. But you can see this commission thing is broken. That's not really what happens. The fees are always zero. In Schwab and Thinkorswim, when you get a called away from the stock, it doesn't charge you commissions or fees. So I just zeroed those out, and it's for 27,000. We're gonna go ahead and copy that down. You can see it's sell to close because we're closing that, and we're gonna go ahead and add that transaction. So it bought to or sold to close the stock position that we had. You can see there's the negative to buy it and the positive to sell it back. What we do need to do is come up here, go ahead and delete the call because we're done with that. And we can go ahead and delete this one because we no longer have the shares. All right. And we go ahead and clear that. This just clears off the proposed records. It's just a way to clean to clean up the board. So you can see we have a total of 5 transactions: the initial cash secured put, the assignment, so we bought it, then we sold the covered call, we sold a cash secured put, and the cash secured put expired worthless. The covered call expired in the money, so we got our shares called away, so we got the $27,000 back. So we come up to the summary at the very top. So we're back at the very top, have the Apple ticker selected. You can see shares owned is 0. The shares from puts, because we no longer have any cash secured puts, is also 0. The stock value is 0. There's no unrealized loss or gain. You can see the total credits premium that we've collected on this stock was $843.47. Our cost basis is 0 because we don't own any shares currently, so that we won't have a cost basis. We don't have a cost basis with premium, again, because we don't own any shares. So when you don't own any shares, this is always going to be zeros. It only has a number when you own shares. Now, the funny thing about it is, if we did start buying buying some more Apple or whatever, it would recalculate these, but it will always calculate any previously collected credits. So over time, this number will actually get to the point where it could be negative. And I have done that on other stock tickers. You've basically run a continuous wheel strategy on a ticker for so long, you've collected so much in premium, and as long as you keep on selling covered calls for above your cost basis without premium, as long as you keep on doing that, this number will keep on, the credits will keep on increasing to where eventually you're going to be negative on a cost basis with premium. So you're basically going to be playing with the house's money at that point. Now, if you're living off of the premium, then that's not technically true. But for the any given specific ticker, you could be into it to where you've made so much money on the stock, you're basically using all the premium money you've ever collected to buy the stock that you're basically making more premium on. It's actually a beautiful thing. So what I want to do right now is go back over to the dashboard so we can see how the overall picture has changed. We're coming back up to the dashboard. Again, the 100,000 deposit that we made, you can see the brokerage is now, we got the whole 100,000 back, plus all the premiums we've collected. Total premiums we collected is right there. Overall gain loss 843.47, and the capital left, we now have the 100,000 plus the premium we've collected. That's our capital that we have to work with. And if you come over to positions, you can see we currently don't have any active positions, but if you do include past 3 months, we can pull in that one that we just got out of. So active is by default. That's only if you have any active positions. It'll show you those by default. If you want to just include the past few months of any activity you've had on any ticker, it's not transactions that have happened in the past 3 months. If we've been trading Apple for like years, if we have any activity, like we sold one single cash secured put in the last 3 months, it'll show up here, but it'll show up with the total of everything ever done for that ticker. So anything it shows in this grid is the overall for that ticker for the entire time we've ever been tracking it in this application. So overall for Apple, we have done 5 transactions on it and collected $843.47. And you can see it's since we don't have any active positions, it's 0% of the count. So nothing there. All right. Coming over to performance. So we do have something in 2026, apparently. Let me come back here. Oh, do you know what I did? I bet you I stored the stock transaction. This isn't something that you guys will normally encounter. I'm only encountering it because I'm doing this virtually. Yeah, see, I tracked this stock buyback, or sorry, when we got assigned, when our shares got called away from us with a covered call that was in the money, I tracked it in this month. I shouldn't have done that. So let me come back here and change this back to the real date that it is. So it was called away on the 14th. There we go. Click save. Now the dashboard should behave better. Knock on wood. Yep, see, the 2026 went away. So we're back to 2025. All is well. All right. So now you can see the amount that we collected on the total net working capital, not just the money we had at play with Apple, but the entire portfolio, we made 1.67% on the entire portfolio in the month of November. So this is a pretty powerful way to track your overall performance on any given month as you go through the month to make sure that you're making enough money compared to your entire portfolio to be to meet your goals. So like my goal is I like to focus on making 1% a week or 4% total any given month. So when I'm focused on a month, I try, if I'm like in the first week of the month, I focus on 1%, this number to be 1%. On the next week, I focus on to be closer to 2%, closer to 3%, so on and so forth. This method gives you, because you're not always trading like your entire working capital any given month. You're trading, pieces of it. Like for instance, Apple, we were only doing $27,000 at a time. But just trading those $27,000 at a time for the 2 weeks of virtual duration that we were working with, we made 1.7 or 1.67% in those 2 weeks. So that's a little less than my 1% goal. But we had a lot of other working capital, so we could have technically been in another position on another ticker and made even more. So, it's an aggregate. It accumulates all the premium across all the tickers you're working with to show you whether or not you're meeting your goals or not. And before I forget, because I almost forgot again, let's go over to the preferences screen. All right, so on the preferences screen, I have a currency format. By default, it just uses whatever your browser is set to, but we have some customers that like to pick the currency format that they want. So they, pick a specific format to see all the currencies listed in. Here are those commission and fee defaults. So for buy to open commissions, I have it set to 50 cents, sell to open commissions. So you can see all of these, all the buy to opens, sell to opens, buy to close, sell to close, commissions and fees. You can set those defaults right here. And then also the stock defaults. If your brokerage charges an exercise or an assignment fee, that can go right there. And that's the preferences. And before I wrap things up, I just want to let you know that does conclude this series on Apple of selling a full continuous wheel position. I am planning on doing other stocks like Tesla, Microsoft, Nvidia, just some other stocks to go through the process of showing you the continuous wheel strategy and how to track your transactions in this web application. Till next time, talk to you then. I want to thank you for watching. Like and subscribe if you haven't already, and go out today to MyATMM.com and get your free account so you can start tracking your own transactions. Thanks, and I'll see you in the next one.